Ladies and gentlemen, today we are treating two questions from previous question papers. Question 2, inventory valuation. Mandy Jones is the owner of TV City that sells TV set and has 2 branches shops in KZN. The periodic stock system is used. No missing items were recorded for the financial year ended 28 February 2023. Right. Now, calculate the value of closing stock of active TV set on 28 February 2023 using FIFO method. All right, let's go see. We are told that here we have 270 items at the end of the year. We want to know how much is the value of these 270 items using the first in, first out method. So we know that we're gonna be working from down going up because we want to believe when we sell, we started from up going down. So what is remaining should be in the bottom. Right. Now, let's look at the information that we're given. There is a return here of 60,000. So we cannot just rush and say 270 is from 300. What if the return is from here? And if this 60 return is from here, it means that whatever that is remaining from the January stock will be 240. But now let's go down there and see what is happening. This branch sell Pacific and Caspian Smart TV. Mandy One was concerned about the following issues. The Caspian Smart TV set will be too expensive for her customer. High stock level in all her product might negatively affect the business. Right. Mandy expect to sell 1,000 Pacific TV sets in the 2023 financial year. She therefore adjusted the selling price of Pacific TV sets in September and asked the bookkeeper to provide an analysis of the quarterly sales. Alright, so now you can see that the examiner didn't say anything from the 60,000 units that have been returned. So now we have to look for some hints around. So we are told that these 60 units which were returned, each was costing 4,100. So let's go up here and see on which one is costing 4,100 from May, August, September, and January. We see that is the stock from January. So meaning that the 60,000 that has been returned is from the 300 number of units which were purchased in January. So meaning that from here we will be left with 240. But now we need the value of 270. So where is the 30 going to come from? The 30 is going to come from, remember we start here going up. The 30 is going to come from the 400, which was from September, which is 4,000. Right. So now you are going to say you are going to have your 240 multiplied by 4,100, and you also have 30 multiplied by 4,000. This one up here will give you 984 and this one will give you sorry, 120,000. And when you add the total, your answer will be 1,104,000. Right. And then the next question is asking us to calculate stock holding period in days. On the Arctic TV sets using the closing stock figure. So when the examiner is telling you to use the closing, remember when you calculate stock holding period is average sorry, average stock divided by cost of sales. So the average stock, we're gonna take stock from last year, add together with this year, divide by 2, and then you get your average, and then whatever answer you get, you divide by your cost of sales. So here you don't have last year figures, you only have this year figures. So if you only have this year's figure, that's where you see even the examiner is telling you to say you can use the average. You can use the closing stock figure, which is the one that you just calculated now. And then it's going to be your closing stock divided by your cost of sales, which is 6,010,010. You're going to have your 1,104,000 divided by 6,010,000, and then you're gonna multiply this by 365 because you want to convert it to days, and then you will get your 67 days. Right, let's go to 2.2.1. 2.2.1 is asking you to calculate the value of closing stock for Pacific TV set on 28 February using specific identification. Right,